This is Money Exchange with Andrew Barnett.
Hello, I'm Andrew Barnett and welcome to Money Exchange. Well, it's finally happened. The Aussie dollar has hit a fresh 6-year low, trading under 70 cents against the US dollar. But the big question is, could it go lower? As a currency trader, my thoughts are yes and yes. But I want to ask some respected currency experts, for their views. So tonight on the program, we'll first cross to Singapore to speak to Annette Beecher, Head of Asia Pacific Research at TD Securities, for her take on the Aussie economy and what she thinks the Aussie will do next. I'll also chat with a gentleman whose company exchanged over $13 billion in currency deals last year. He's sure to know what big business is likely thinking. Plus, with all this volatility in the markets, you and I probably need a holiday. So we'll cross to Brisbane to speak with Flight Centre's Head of Leisure Travel to find out how we can make our Aussie dollars go further when holidaying locally or overseas. And as always, we'll be answering your currency questions live on the show. You can email me directly right now at Andrew at moneyexchangetv.com. Let's kick things off by first taking a look at this week's headlines. The Australian dollar plunged to a fresh 6-year low, falling below 70 cents on Friday as concerns over the global growth outlook continue to take their toll. It caps off a shaky week for the currency, with many analysts slashing their forecasts, including Deutsche Bank, who says a $50 handle could be possible by the end of next year. In US news, the Federal Reserve's September meeting is looming large, with policymakers trying to downplay the market's focus on the timing of a hike. Key jobs numbers are expected to weigh on the Fed's decision. And the European Central Bank has cut its inflation and growth forecasts for the Eurozone at its latest policy meeting. While President Mario Draghi insists he's ready to act to support the economy, he's holding back from any additional easing at this stage. Now it's time to chat about the Aussie economy and where to next for the Aussie dollar. And for that, it's Head of Asia Pacific Research at TD Securities, Annette Beecher, joining me live from Singapore. Annette, thanks for your time again. The Aussie dollar broken under 70 cents today. What's going to hold it back from going down to 60 cents?
Good question. We've been watching this key 70 cent level for quite some time now. A couple of times the Aussie has tried to probe below those levels but managed to snap back to the point whereby we come into work and it seems to be 70.10 just about every day this week. But it does seem to be finally closing below, and obviously where it closes is very different to where it trades intraday. So it is finally selling at 69 and change. Where is it going from here? Well, up and down. Not to be particularly helpful on that front. But the news out of the last couple of weeks, as we've all been discussing, is slower China, slower Australia, and it's very hard to find fresh buyers for the Aussie dollar at these levels. And so we recently also slashed our currency forecast. We were very optimistic at 74 by year end, and we've now thrown in the towel and looking for 68 cents by year end.
So with interest rate swaps recently looking towards a 90% chance of the RBA cutting rates, with what's going on in China, what's happening here in the Aussie economy, I know you've slashed your forecast for the Aussie dollar down to 68 cents. Do you think that they'll drop rates again between now and Christmas?
The odds suggest no is the shorter answer, but of course we're not paid to give you short answers. The much longer answer is the next move is more likely to be down than up. We did get some pretty disappointing GDP numbers this week, with 0.2% on the quarter, pretty much held together by a bit of unexpected government spending. And if you try to dig through the income details, there's certainly a lot of discussion about national incomes continuing to shrink. However, all of that is still as the RBA has expected, and they still don't have a clear or explicit easing bias. They're still quite neutral, as we heard from them earlier this week as well. So I think they're going to hold the line. Their last set of forecasts were based on a currency of 74 cents, and as we're saying, it's likely to be below 70 in the next few months. So hopefully the currency does the work for them, and that certainly means the housing market doesn't get more of a boost, because I don't don't think it needs it.
Well, I've been reasonably bearish on the Aussie dollar for the last year or two, as many traders have, but I'm starting to get a bit bearish and pessimistic about the Australian economy. I'm going to read some numbers here for you, and you let me know whether I'm being too pessimistic or perhaps we should be more optimistic. Business in Australia at the moment isn't spending. They're giving out dividends instead of spending money. Our current account deficit blew out to 19 billion. Iron ore exports fell by 8% in the June quarter. BHP's profits down 86%. China's manufacturing worst in 3 years. This week, 0.2% GDP and weak negative retail sales, and unemployment remains over 6%. I mean, some people are asking me in the street, Andrew, are we heading for a recession in Australia? Is that being too pessimistic?
What it does do is risk being a self-fulfilling prophecy. All of those numbers are not in dispute, Andrew, whatsoever. However, I guess we should try to say a couple of positive things. And one is particularly the lower Aussie dollar is really bringing in the tourists, and you will be revisiting that subject in a further interview. But tourism in Australia is adding rapid dollars into the bank. It's not just the Chinese, it's the Americans and the Europeans. So let's hope that the money that we're not making out of iron ore or coal and gas to a lesser extent might be made up for in the services exports, which is your education, your tourism. And so hopefully we've got maybe a little bit of a brighter future on that front. And secondly, on the unemployment rate, yes, the last number did jump up from 6.1 to 6.3. There was a terrible market reaction at the time. But the RBA has a completely different take on that. And in fact, even again this week, they said the labour market is stronger than it would be expected, given that the economy is running at a sub-trend pace. So I'm not trying to be wildly optimistic, but I'm certainly worried that the more media commentary talk about recession, if consumers really shut their wallets, we will be in one. So we need to be really careful about what we say and what message we're projecting.
And what about New Zealand, Anna? We've seen Graham Wheeler there drop rates a couple of times this year already. We're obviously seeing dairy auction prices at the worst levels at one point this year than they have been since dairy auctions began. Are we likely to see further rate cuts next month from the RBNZ?
Actually, next week. Next week, the RBNZ meets on the 10th of September, and they're certainly poised to cut the cash rate there from 3% to 2.75. But don't forget, this is the same Graham Wheeler who added 100 basis points last year because he thought that housing and net migration would be inflationary. It turns out it's not inflationary at all. And so those precautionary interest rate hikes of last year are being slowly chipped away, and us in the markets expect them to return to where they were, which will be 2.5% by year end.
And Ed, thanks so much for your time. Always look forward to chatting with you every now and again. Thanks so much.
Thanks, Andrew.
After the break, I'll be chatting with Michael Judge from Forex on what big business is thinking when it comes to the Aussie dollar. Don't go away.
Knowledge applied is power. Incredible things are created with the right knowledge. Knowledge also breeds foresight, giving strength to manage risk and make better decisions. When you choose to trade Forex with Go Markets, you'll gain access to our foresight and expert market analysis. Analysis that could help you identify potential financial risks and wait for the right opportunities. Go Markets, your first choice for Forex.
Eclipse Chewy Mint?
Thanks.
You look fresher.
Don't be ridiculous.
Eclipse Chewy Mints. What would drive humans to leave Earth on a one-way ticket to Mars?
Atch! It's my hay fever. I'm allergic to the planet.
There's a world of pollen blocking my nose.
There are 2 billion cats on Earth.
If only they tried. Nasonex Allergy. Nasonex Allergy targets 4 allergic responses. It gives you more effective hay fever relief than antihistamine tablets. Nasonex Allergy. Enjoy Earth.
Spoil your dad this Father's Day at Dick Smith. Get up to 25% off Asus and Toshiba laptops over 500. Up to 15% off the Samsung TV range. Plus 20% off iTunes gift cards. Hurry in and get a great deal for Dad at Dick Smith.
I've had lots of different jobs, but my super's always stayed the same.
Because 7 out of 10 Australians have chosen to stay with their super fund when they've changed jobs, they could be up to $50,000 better off. Why not join them?
It's Australian and it's super.
Welcome back to Money Exchange. Joining us from Sydney City Studio to discuss where some of the big money flow is likely headed in the FX market is Michael Judge, Senior Foreign Exchange Dealer at Oz Forex. Michael, thanks for your time this evening and welcome to Money Exchange. I saw recently this week a major bank released a report saying that hedge funds and big businesses were abandoning the Aussie dollar. Your company transacted over $13 billion last year in foreign currency transactions. Are you seeing something similar at Oz Forex play out in the markets at the moment?
Good evening, Andrew. Yeah, I think the simple response to that question is a resounding yes. I suppose a lot of the herds that we have seen have certainly amplified in their numbers over the course of the last week. As you mentioned there, obviously that 70 US cents band is certainly circulating as a very key level this evening, heading into those non-farm payroll numbers. But certainly a lot of the transactions flowing across Oz Forex desk still certainly a resounding sell signal for the AUD.
So we've seen obviously a big spike in volatility in the markets in the last couple of weeks. Is the current volatility we're seeing, do you think, likely to peter out over the next few weeks? Obviously, we've seen another drop today on the Aussie dollar and some flight to safety on some currencies. Is this overdone now? Are we ready to turn around and move back positively again on markets?
I think in the short term, yeah. I mean, a lot of the moves that we have seen have been exaggerated, but I think over the medium term, some of those lingering concerns, particularly over the growth outlook for the Chinese economy, and more so the inflated equity values that we are still seeing across Chinese equity markets, are still a significant cause for concern. And we look at the AUD value still circulating around 70 US cents. Unfortunately, it does have that precedent or very close link to broader risk parameters. So if we are to see any additional flare-ups in particular from China, I think that'll only accelerate, obviously, that bearish AUD outlook.
And what's your take on the latest week GDP numbers and retail sales figures? Is your view at Oz Forex that we may see another rate cut between Christmas and exacerbate further declines on the Aussie?
Yeah, I think there's been a few headlines circulating this week. Obviously, the Australian dollar outlook, it's certainly, at the moment, it's not wonderful, but on the other end of that spectrum, it's far from woeful. So, yeah, I appreciate that the GDP print this week, certainly not overly optimistic, a 0.2% growth rhetoric over the course of Q2, as well as that very disappointing retail sales number. So not a whole lot of positivity, I should say, for the domestic point of view, but flowing through what that means for the currency, I still think, despite the fact we've seen a sell-off, above that 150 basis points or 1.5 cents this week, the Australian dollar still has done quite well to absorb some of those domestic, softness, I should say, in the domestic numbers which have come across the desk.
So tell us a little bit about some of the risk protection that Australian businesses are taking as they're selling Aussie dollars. Are they buying US dollars forward expecting a lower dollar? And what are some of the types of trades they're making with you guys?
I mean, trying not to generalise too much, but I suppose particularly in Oz Forex's case, we do have a very large importing base, meaning that our clients do have a broader US dollar exposure. So during periods similar to what we're encountering at the moment, that is of heightened volatility, obviously inquiries surrounding and obviously the demand for hedging tools like forward exchange contracts, vanilla options, as well as market orders, I suppose that there is a demand there to diversify their use of products beyond a simple spot transaction. So I think at the moment the mantra or objective from a business perspective is still very much a risk management, and I suppose what that allows businesses to do is to certainly create some certainty around what exchange rates they're going to be seeing over the foreseeable future, moving away from a mechanism developed simply to beat the market. It's simply there to provide certainty and mitigate some of those risks surrounding what has been a very choppy 4-week window.
All right, let's take a couple of quick questions from the viewers, and we've got an email from Chris in Melbourne. What causes the Aussie dollar to fall in value? Well, we've seen a couple of things this week contribute to that, but what are your thoughts on that, Michael?
Yeah, I'd probably touch on two things. Just firstly, global interest rate settings. So much of the market's attention is focused on rhetoric that we're seeing from the RBA as well as from the US Federal Reserve. And what we have seen since 2008 is a global economy which has really been saturated by cheap money and obviously readily available money. And what that has done, yes, it has caused certain asset bubbles in varying circumstances, but from a currency point of view, we have already seen a very large shift, not only into the US dollar, but into the US dollar denominated assets off the back of the expectation that the Fed obviously are going to hike rates for the first time in 9 years. And I suppose we contrast that to the outlook here domestically, and certainly the type of attractiveness from a currency point of view simply equates to going long US dollars, certainly over the foreseeable future. So just firstly touching on interest rates being a key determinant of AUD value, as well as I touched on earlier, obviously broader forms of volatility or instability. So again, a lot of the falls that we've seen this year in particular, we've seen some concerns over Greece, we've seen some concerns over the growth trajectory in the US, and then more recently, obviously, some concerns over China circulating. So whenever we see, I suppose, these flare-ups across global markets, it does spell a lower AUD. So pointing towards interest rates firstly, and then obviously that proxy risk setting with the AUD, which is very vulnerable too.
Michael, thanks so much for your time this evening. Really appreciate it. Thanks so much.
Thank you, Andrew. Cheers.
We're going to take a short break, but don't go away. After the break, we'll chat with Tom Wally from Flight Centre about how you can lock in a great deal for our next holiday before the Aussie dollar drops any further.
Knowledge applied is power. Incredible things are created with the right knowledge. Knowledge also breeds foresight, getting strength to manage risk and make better decisions. When you choose to trade Forex with Go Markets, you'll gain access to our foresight and expert market analysis. Analysis that could help you identify potential financial risks and wait for the right opportunities. Go Markets, your first choice for Forex.
Philips Sonicare Diamond Clean Black for an advanced clean and a whiter smile. Philips Sonicare Diamond Clean, the ultimate sonic toothbrush. Innovation anew. Philips, now available in black, white and pink.
It's Coles No Annual Fee Mastercard time.
Get $100 off one Coles supermarket shop.
That's $100 off.
If approved for a Coles No Annual Fee Mastercard by October 6.
Pay no annual fee, savings instantly.
Would you like your $100 off right now?
Whoa! 100 is a lot. That's $100 off our shop.
Hurry, offer ends October 6. Apply at colescreditcards.com.au.
Coles Mastercard.
Stephen, what kind of shape are you in?
Real good shape.
You are kidding.
Two friends who spent 30 years apart.
Stand up as tall as you can to intimidate the bear.
Will spend 2,000 miles together.
Bryson, I missed you.
A walk in the woods.
Around 10 years ago, when I moved from the city to a regional hospital, I thought I'd seen the last of ice. But it's here too. We're treating people affected by ice every day in emergency. People suffering ice-related psychotic reactions. It's terrible for them and the people around them. Ice destroys lives. Don't let it destroy yours.
For help and information, visit the drugs website, authorised by the Australian Government, Canberra.
Welcome back to Money Exchange. Joining us from Brisbane is Tom Wally, Head of Leisure Travel at Flight Centre, to give us some tips on how we can potentially save some money on our next holiday before the Aussie dollar goes any lower. Tom, welcome to Money Exchange. Thanks for your time.
You're welcome. G'day, Andrew. How are you?
Now, I'm planning on heading to the US for Christmas, and I know many of the viewers will be looking at what the Aussie dollar is doing and thinking that European getaway or going to the UK is going to just be so much more expensive in the next 12 months. If I'm planning a trip overseas to the UK, Europe, or perhaps to the US, which appears to be going to be the most expensive places with the Aussie going lower, what can I do now to either lock in a good deal or perhaps save some money on a trip?
Yeah, look, it's a good question. I mean, the US dollar has tried its best to thwart Australians' travel plans for many years, and we've looked at this for many years and found no real correlation between the declining dollar and Australians' desire to travel to the US. I mean, in fact, last year, travel to the US increased by well over 5-6% outbound from Australia, and we certainly saw sales in Flight Centre going up well above that. So really what we've found is the desire to travel to places like the US, Europe, the UK is driven by cheap fares. And cheap fares have been in the market on and off for the last 10 years, and we're certainly seeing some of the airfares to the US now being the lowest they've ever been. So we're not actually seeing any decline in desire to travel to those destinations. I guess the big thing for customers to do now is lock in those cheap fares. I mean, we're seeing fares to Hawaii now for as little as $500, LA for under $1,000.
Wow.
New York for under $1,200. So that kind of big expense that people want early on of that airfare is as cheap as it's ever been. So look, we haven't seen any dip in desire to travel to these destinations, but what we're starting to see a little bit of from time to time is people maybe downgrade from a 5 to a 4-star, or maybe go for one less day, or something like that. But look, spending money is not something that a lot of Aussies tend to take into account when they're buying those great airfares right at the start.
And Tom, at the moment, are the airlines going to share the love and drop their fares based on oil prices being so much lower? I know you said they are low, but are we going to see them go lower?
Look, it's a great question. The reality is, I mean, we're selling economy of fares now across the ditch to LA for under $900. I don't think they've ever been cheaper than that. So you've got to understand airlines have to operate their aircraft and pay for the fuel. And at $900 for an economy airfare, I don't think you're going to find many times it gets cheaper than that. So the reality is it's as cheap as it has been right now. I can't see them dropping a whole lot lower than that. So we do see the occasional special come out, but it's never less than $800-900, and that's what we're seeing in the market right now. And now's a great time to buy. The Aussie dollar, a lot of airlines, like we do, hedge against currency losses, and what they're seeing now is they're able to actually offer these fares and still run a route and make a profit, which is great.
What about in Southeast Asia at the moment? We've obviously seen big declines on the currency values of the Malaysian ringgit, the Thai baht, etc. Is that going to get cheaper for us travelling from Australia, or are we seeing the Aussie dollar declining and those emerging market currencies declining as well, so the prices are going to probably stay about the same? What are your thoughts?
Well, look, I mean, there's no question that the Aussie dollar versus a lot of those Asian currencies, it hasn't performed that well, other than, as you mentioned, the Malaysian ringgit. But I think Asia is always great value for Australians. The best part about Asia, the airfare war to Asia has been on in earnest for years and continues that way with all the low-cost carriers as well as the legacy carriers in market. Some of the fares to Asia are still phenomenally competitive compared to even what they were 20 years ago. They're less than that dollar value. And the great thing about Asia is once you get there, the buying power of the Aussie dollar, regardless of how it moves, is still really, really strong. But what we're seeing a lot of people doing now is locking in the package deal. So you're prepaying a lot of stuff before you go, whether that be flights, transfers, accommodation, meals. We're seeing a lot more all-inclusive sales happening now prior to departure, so people are buying up all that stuff before they leave. And that means that when they're on the ground, all they're really purchasing is what they want to buy. You know, they're spending money to buy gifts, or to go to the local theme parks, whatever it may be, but people are pre-purchasing a lot more. So Asia's still fantastic value, and never for Australians have there been more flight options, more hotel options to Asia. So it doesn't really get too affected by these currency changes, we're finding.
By the sounds of it, there's some great deals to be had close to home. But it's interesting you noted that about going overseas to the UK and the US, you haven't seen a drop-off. But Tom, I really appreciate your time this evening. Thanks so much.
You're very welcome, Andrew. Thanks. Have a great night.
It's time for our currency quiz question of the week. And the winner this week will receive access to all my currency trades for the next month, text directly to your mobile phone. So this could be a really good one. Here goes. The question is, what country had to take 6 zeros off its currency because it had devalued so much and inflation was rampant? To give us your answer, simply go to moneyexchangetv.com. That's moneyexchangetv.com. Now, I'm going to give you a little hint. Joe Hockey was talking from there this afternoon. That's the currency right there. I'll take it away, and you can jump on to moneyexchangetv.com and give us your answer. Well, that's all we have time for in this week's program, but you can keep up to date with all my currency predictions and tips by going to moneyexchangetv.com and registering to receive my daily reports. Thanks for your company. We'll look forward to seeing you again next week. Bye-bye.